stock market investors got more signals of how the recently announced tariffs are impacting big global companies like PepsiCo. I'm going to review Pepsi's latest quarterly earnings results, where the management team highlighted how it's already getting impacted from the tariffs that were announced by President Donald Trump. I'll also update my buy recommendation for Pepsi stock. You probably noticed Pepsi's shares are down significantly in today's trading after the company announced quarterly earnings results on April 24th, 2025. Thankfully, I warned investors about PepsiCo stock coming into these quarters' earnings results, and I told investors that I wouldn't be buying the stock ahead of the earnings release. I'm going to update that recommendation here and let you know if I think it's a buy now following the dip in the share price. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So when you're looking at PepsiCo's results, I tend to focus on organic sales and organic earnings per share because the company's usually making acquisitions and making divestitures that are skewing results depending on when it made the acquisition and divestiture. Its organic or core results for revenue and earnings per share exclude those factors and give you insight into the company's profits and sales without the impacts of those divestitures and acquisitions. So its first quarter results, they reported organic revenue growth of just 1.2% and core constant currency earnings per share declines of 4%. So already PepsiCo feeling the pain of the impacts of tariffs. The management said that we expect even more volatility and uncertainty, particularly related to global trade developments, which we expect will increase our supply chain costs. Simultaneously, consumer conditions in many markets remain subdued. So not only are PepsiCo's cost of goods rising because of tariffs, but at the same time, consumers are pulling back. And consumers are pulling back because they're feeling the impacts of tariffs. They're feeling the uncertainty. They're feeling the businesses that they're working inside becoming more cautious, reducing expansion plans, stopping promotion opportunities. And so consumers feeling those developments, they're also saving a little bit more, pulling back on some discretionary spending, trying to save more money. And so that's hurting demand for PepsiCo's products. And then the tariffs are increasing cost. It's a bad mix for Pepsi right now. So Pepsi's planning some mitigation actions to address these higher supply chain costs where possible. So this is a little bit concerning because they don't have a plan in place. They don't have something they can go to. They are searching still, right? So it's been a few months already since tariffs have been announced and tariffs have expanded, and still PepsiCo doesn't have a solution. And it's not a knock on PepsiCo's management team because this is a very difficult problem to solve. They have spent decades building out their supply chains and their manufacturing and their sourcing. And now all of a sudden, there's a big shift to that business model. And it's not going to be an easy fix. They're still searching, they're still planning, and it's going to take some more time. It may not have any solution. They may not have any solution because you might say, well, why don't they just bring manufacturing back to the United States? Well, that would likely increase their cost of goods even more than the tariffs will, right? So most of their imports right now, the area that's getting impacted are the concentrate imports. And they talked about how most of their imports are coming from Ireland and the 10% impact on the tariffs in that country. So 10% compared to if they were to bring manufacturing completely back to the United States, that would be a much larger cost. And they also wouldn't be able to do that immediately. It would take a long time for them to set up their manufacturing or increase their manufacturing in the United States. They already have some presence in the United States. Some of their products are manufactured here, but to bring more of their manufacturing here would cost more money and take more time. They went on to say that for 2025, they continue to expect low single-digit organic revenue growth. So low single-digit is 1%, 2%, or 3% revenue growth. But now they expect core constant currency earnings per share to be approximately even with the prior year. They were previously expecting mid-single-digit growth for earnings per share. So they were expecting 4, 5, or 6% growth in earnings per share. So now they're saying 0% growth in earnings per share. So from 5% growth at the midpoint in profits to 0% growth in profits. That's a big swing for a company the size of PepsiCo that doesn't experience those types of swings all that often. But of course, this is an unprecedented circumstance, and so they are feeling the heat. One of the benefits of investing in a company as stable as PepsiCo is, even though this is a unprecedented event, an increase in tariffs of this magnitude has not happened in decades, it's only going to impact the company's earnings by 5% this year, right? So think about that. And that's why companies like PepsiCo are more attractive during uncertain times and volatile times, because their business is so resilient, even during unprecedented circumstances where other businesses are experiencing much larger swings. PepsiCo's earnings are only swinging by 5%. So as a reminder, my discounted cash flow valuation for PepsiCo has the stock valued at $149 a share. The current market price is $135 per share. It's very close to its 52-week low of $134 per share. And typically, if I were to see a business like PepsiCo trading at even a fair value, right now it's undervalued, but even if it were trading at a fair value, I would be recommending this stock as a buy, because I feel that a great business at a fair value is a great deal for long-term investors. But right now, I think there's a little too much uncertainty surrounding PepsiCo and the impacts of tariffs. So to update my recommendation, let me remind everyone, I had the stock rated as a hold coming into these earnings results, and I last updated that on April 1st. I'm going to keep PepsiCo stock rated as a hold for now, even though I think it's undervalued. I want to do a little more research into how its business is going to be impacted by the tariffs. I want to eliminate or reduce some of that uncertainty. And I wouldn't be surprised if I upgrade this stock in the next couple of weeks, but I need more information before I do that. I need to digest more of the company's latest earnings results before I can upgrade this stock, but I'm going to keep it rated as a hold. But I think its movement is upward. I think the rating will move upward in the coming weeks. If I was to make a prediction, if it's closer to a sell or a buy, it's definitely much closer to a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.